Hey everyone, welcome back to Corporate Decoder, the place where we break down complex financial documents into plain English, proving that even the most mind-numbing corporate speak can hide some juicy insights. Today we're diving into IonQ Incorporated's latest filing, and let's just say there is a bit more than meets the eye with their stock offerings. Stick around and we'll decode it all for you. We'll give you the inside scoop on IonQ's recent moves, what it means for their stock, and what you should be watching out for. And hey, before we jump in, if you love getting these clear, no-nonsense analyses of corporate filings, make sure you hit that subscribe button. Also, we've got a fantastic community over on Discord, linked in the description below. It's the perfect place to chat about these companies and get even more insights. This report from IonQ Incorporated is all about their stock. Think of it as a company updating everyone on the different types of shares they have out there and how they can be bought or sold. We're looking at their common stock, which is what most people think of when they hear about owning a piece of a company. This particular filing is focused on something called a prospectus supplement. Now, a prospectus is like a detailed brochure for investors. A supplement just adds some extra specific information to an already existing brochure. In this case, it is about allowing certain people, called selling stockholders, to sell a lot of IonQ's common stock. We're talking about over 5 million shares here. Beyond just the regular stock, IonQ also has something called warrants. Imagine these as special tickets that give you the right, but not the obligation, to buy shares of the company's stock at a set price, which is $11.5 per S-share in this case. These warrants also have an expiration date, and the filing tells us that the ones being discussed here will expire on the 27th of February 2026. The date for all this action is the 27th of February 2026. This is the date IonQ officially filed this important update with the Securities and Exchange Commission. Or SEC, this is pretty standard procedure when companies want to sell more shares or allow existing shareholders to sell shares. It keeps everything transparent for investors. Now, you might be wondering why this matters. Well, when a large number of shares become available for sale, it can sometimes put pressure on the stock price. Think of it like a store suddenly having a huge sale on a popular item. If there are way more items than people who want to buy them, the price might need to drop to get them all sold. This filing tells us that a significant chunk of IonQ stock, more than 5 million shares, is now cleared for resale. This is important because it affects the supply and demand for IonQ shares on the stock market. The company itself isn't selling these shares directly in this instance, but the selling stockholders are. This means that these shares held by others are now permitted to be traded more freely. It is crucial for investors to understand this potential increase in the number of shares available. Let's look at the specifics here in the filing. We see their common stock being traded on the New York Stock Exchange under the ticker symbol IonQ. And then there are those warrants trading as IonQWS also on the New York Stock Exchange. These are the symbols you'll see if you are tracking the company's stock performance. The par value of their common stock is incredibly tiny, just $0.0001 per S-share, which is common for many companies and doesn't really reflect the market value. The filing also confirms that IonQ Incorporated is an emerging growth company. This designation comes with certain regulatory benefits, allowing them to phase in new accounting standards over a longer period. This can give them a bit more flexibility as they grow. So, what is the big story here? It is about increasing the potential supply of IonQ stock in the market, when you see over 5 million shares being registered for resale. It signals that there could be more shares hitting the market. This isn't necessarily a bad thing, but it is something investors need to be aware of. It could mean more trading activity and potentially more volatility as these shares find their buyers. Now, looking at this filing from a broader perspective, what does it suggest about IonQ's trajectory? IonQ is a player in the quantum computing space, a very cutting-edge and potentially transformative industry. Companies in this sector often have volatile stock prices because the technology is still developing and its long-term commercial viability is, to some extent, still being proven. Filings like this, which deal with share availability, are often part of the company's strategy to manage its capital and provide liquidity for its stakeholders. The presence of warrants also suggests the company has used them as a fundraising tool in the past, likely to secure capital for research and development or other operational needs. The fact that these warrants are exercisable at $11.5 means that if the stock price goes significantly above that level, the holders of these warrants will likely exercise their right to buy the shares at the cheaper, predetermined price. This could lead to more dilution of existing shareholder equity if a lot of warrants are exercised. One key risk with companies in emerging industries like quantum computing is the high cost of research and development and the long timeline to profitability. This filing doesn't directly address financials, but the management of stock and warrants is intrinsically linked to the company's overall financial health and its ability to fund its ambitious growth plans. In conclusion, This particular filing from IonQ Incorporated is primarily about managing the availability of their stock and warrants in the market. It's a behind-the-scenes update that allows for more shares to be traded. For investors, it highlights the potential for increased supply of IonQ stock, which is a factor that can influence its price. The company is operating in a high-growth, high-risk sector, and understanding how their shares and associated instruments like warrants are managed is crucial. There are definitely opportunities in quantum computing, but the risks associated with early-stage technology and market adoption are significant. It is a space to watch closely, but one that requires a good understanding of the underlying technology and the company's financial strategy. Alright, that is our breakdown of IonQ Incorporated's latest filing. What is your take on these share movements and what they signal for the company's future? Do you see quantum computing as the next big wave, or is it too early to tell? Drop your thoughts in the comments below. If this analysis was valuable and helped you cut through the corporate jargon, hitting that like button really helps us out, and make sure you subscribe for more deep dives into the world of corporate finance. And don't forget to join our burgeoning community over on Discord. The link is right there in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.